Hello guys, welcome back to my channel once again. Today this is CN Honor on the screen and you are watching CN Great Counsels and Forex Trade. And in today's video I'm gonna be giving you another wonderful strategy once again, and it's a powerful one. That's the strategy that you can see on the screen now, and I call it Bollinger Swimmer Strategy. This is a special strategy, Bollinger Swimmer Strategy, and it actually gives you two entry points. Okay, the first one just met now, and I'm gonna take just a trade. Let me take on a trade. Okay, and then let's keep going. Yeah, I just took on a trade, but then that's just a sniper entry. The confirmation for a second entry will soon be met, and then we'll take a second trade. But then we are taking between 7 to 12 candlesticks. Okay, between 7 to 12 candlesticks. Let me quickly put my vertical line to show where we entered the trade. Okay, and then I'm gonna give you the condition fully. And if you are new on this channel, please, I'd like you to hit that subscribe button down below, turn on the notification bell. That way whenever I upload a new video, you'll be the first to watch it. Okay, you'll be the first to watch it. All right, now let me quickly give you the setting to this very strategy. Okay, while we are still waiting, yeah, we have on my main chart, of course, I hardly trade without having fractals on my channel. The indicator we have on the main chart, the main one, is fractal. These are the parameters. Okay, the style is just 2 pixels, color is purple. I've made several videos on fractals where I explained the usefulness. Okay, so you can check it out. For those of you who call or chat me up to ask me about the usefulness, I've made videos on this. You can check it out on my channel. Then I also have on the main chart my parabolic SAR. I've also made a video on this. You can check it out. But all these things, all these indicators, the parabolic SAR and then the fractals, okay, they are used to know where prices have been rejected. Okay, it helps you to also pick the swings, like the fractal helps you to pick the swing, and the parabolic SAR also helps you to know where price have been rejected. Okay, once price is rejected and the SAR or fractal is introduced, the market must go the other way around, even if it's for a while, maybe 1 candlestick, 2, 300 candlesticks, but then the market must go the opposite direction to signify that price have been rejected. So these are the parameters. The step is 0.11, maximum is 0.2, style is 2 pixels, color is purple. Then you click done. Okay, our trade is still running. Okay, yes, the condition for a second trade just met now. The parabolic SAR just introduced, so we're going to take one more trade. Yes, we're going to take one more trade. Okay, I'm going to take one more trade. Yes, yeah, so this is where we took the second trade. Okay, now let me quickly show you something that just happened. The parabolic SAR was introduced. Yeah, just as you can see, look at it here. Then the first condition, well, this is actually where the conditions are made, and I would want you to stick to the very last confirmation. The first one was actually a sniper entry, but then the second one, this is where the condition was properly met. Okay, don't worry, I'm going to give you the full condition. So we are actually counting our 10 candlesticks from this particular one. Okay, we are counting our 10 candlesticks from here. Okay, so but let me quickly give you, I want you to take note of this place, because I'm going to take note of what happened here between this Bollinger Band and the envelope, and then take note of where the parabolic SAR was introduced, because I'm going to use it to give you the condition. But let me quickly give you the settings. Then on indicator window 1, okay, we have 3 indicators, and the first one is our RSI, relative strength index. These are the parameters. The period is 1. We don't want to see any line there. then you apply it to median price in bracket HL/2. Then the size is 3 pixels, color is black. Okay, I'm using black because the background of my chart is black. Okay, you can use any color of your choice, but use black as the color of the pixel if your background is white. Then the levels, very important. Take note of the levels. We actually have 91. Okay, we have 91, 90, 89, 88. Then we have 12, 11, 10, 9 and 8. Okay, now this is supposed to be 92. Okay, include 92. So we have 91, 90, 89, 88, 12, 11, 10. Please, we are gonna delete these. All right, we're gonna delete 70 and 30. It's for another strategy. So we have 90. Let me quickly show you so that you can take a screenshot. We have 91, 90, 89, 88, 12, 11, 10, 9, 8 and 92. Okay, then you click done. You can always refer to it. You click done. Okay, let's see how the market is going. Then we also have the envelope. Okay, you set the envelope to the default. The envelope must be the default setting. Set it to default. You click here to get the default. You click here. This is the default. Look at it here. You just click on the default. You have your default setting. You click done. Then we also have the Bollinger Band on the indicator window 1. Here are the parameters. Period is 15. Deviation is 2.000. Shift is 0. You apply it to close. Then the style is 2 pixels. Color is green. You click done. So how do you trade with this strategy? How many candlesticks have we taken? This is 1, 2, 3, 4, 5. Okay, it's remaining about 5 candlesticks to go. Now this strategy, this video may not be that long. So where and how do you trade with this strategy? Now any strategies I will be uploading from now henceforth, you'll be adding just a little price action experience and trend experience, okay, to trade. Okay, now, and that's why I took my time to make several videos on how to identify key levels, how to also identify the trend of the market like a pro, how to trade different classic patterns, so that when I start uploading indicator based strategies, you only need to apply little of that knowledge you've garnered from those videos I made to trade profitably. Now if you look, you discover, let's go to a higher time frame. Even though this market is up, remember I said when you understand what the market is doing from a higher time frame, you can always trade. Okay, even though this market, if you go to higher time frame, okay, you discover like M15, you discover that this market is most likely going up. Okay, but then because you know what is doing, okay, you are scalping. You are scalping, and then you have to scalp from a lower time frame, and we are taking our 10 candles. Even if this market is going up, if you look very well, you discover that the market is actually going up. Okay, but since we are scalping, we're just going to scalp and go away. Now how do you trade this? First and foremost, this is the zoom level. Using zoom level 3 for this strategy. Using zoom level 3, and then the chart position of course has to be here, and you know it already. Here is our chart position, and we're using zoom level 3. Now if you have not watched my video on how to calculate pips, you have to really do that, because we're going to use that here. Now whenever you see a spike, this is boom market, whenever it spikes, you measure the spike and then calculate the pip value made. If it is 20 and above, okay, that is the first confirmation. Now this is 23 pips made by this spike. Okay, whenever you discover that, then you quickly go to your indicator window 1. Now the green lines you're seeing here is the Bollinger Band, while the blue is the envelope. Now if after a spike, the spike made up to 20 pips and above, then you will look at the Bollinger Band. Considering for boom, you are looking at the blue line of the envelope interacting with the green, the first line, that is the upper line of the Bollinger Band, whereby the green line of the Bollinger Band, that is the upper line, crosses the blue line of the envelope, okay, downwards, and that crossing has to be right inside this RSI cloud, okay, cloud levels, these cloud levels. If the crossing is not inside the cloud level, please do not take the trade. Now as you can see, now you discover that the green line of the Bollinger Band crossed the blue line of the envelope, okay, moving downwards, and at that same point you are looking at your main chart again, whereby the parabolic SAR is introduced, shifting from down left to up right for boom. Now the opposite is the case for crash, okay, the opposite is the case for crash. Now let's count and see how many candlesticks we've taken. This is 1 2 3 4 5 6 7 8 9 10. Okay, now at the close of this candlestick, we're going to take our trade, our profit, and then I'll continue with the explanation. Okay, but then I was saying that the first condition is that you are looking out for a spike, and whenever it spikes, you calculate the pip value made. If it's up to 20 and above, okay, that's the first confirmation. Then you are going to wait for a crossing between the blue line of the envelope and the upper line of the Bollinger Band for boom, okay, for boom. Now we're going to take a profit before we continue. Okay, right now let's continue. Now I was saying that you are going to look out for a spike. Now for boom, you are considering a spike, and after the spike you are going to calculate the pips made by the spike. If the pips made by the spike is 20 pips and above, just as you can see, this is 23 pips. Okay, now if the pips made is up to 20 and above, then you quickly look at your indicator window 1, okay, and you are looking out for a crossing whereby the green upper line of the Bollinger Band crosses the blue line of the envelope from up downwards this way, and the crossing, I said, has to be buried right inside this RSI cloud level. The green level you're seeing is the RSI cloud level. That's why we made it 92, 91, 90, 89, 88 to form this cloud level. Okay, so the crossing has to be buried right inside, just as you can see, and it always corresponds with the parabolic SAR, the first one that will be introduced. Now when this market was trending after this spike, you discover that the parabolic SAR was moving from down up, that is left moving up, and then at the introduction of this parabolic SAR, there was a shift from left to right. That's why it's called parabolic shift and reverse. Okay, now this introduction signifies the price rejection and that the market is going to trend down, even if it's for a while. Now, I said earlier that although this market is in an uptrend, because we understand what the market is doing from a higher time frame, and then we also made a discovery, just as I want to show you now. Even from this M1, you discover that there is a particular trend line that is being respected. Okay, I mean, you can always draw your trend line. Okay, that's why I said you're going to just add little price action to whatever strategy I'll be giving to trade profitably. You combine a lot of things, okay, to trade. Now look at it. Now we've taken our 10 candlesticks and we're out of the market already. So you are looking out for a crossing, I mean a spike that is up to 20 pips and above, and then you are looking out for a crossing here between the Bollinger Band and the envelope, and then at the introduction of the parabolic SAR, you execute your trade, and then you take your 10 candlesticks. The market is still going down, but we've taken 10 candlesticks already and we are out. Okay, now we're going to backtest a little bit to see where the conditions were met in the previous market and how it actually went. Now look at this. Let's calculate the pips made by this spike. 27. Now okay, let's check for it here. Let's check for it here. Look at this place that we took to be our chart position. Look at it here. Look at it here. Okay, I hope you can see, guys. Look at it down. Look at it down. Look at it down. That's why I really emphasize that you have a correspondence. Have you seen the conditions met from up down? Then you would have taken your 10 candlesticks and then you are out of the market. The first condition, spike over 20 pips. Then the second condition, crossing met here, and then the parabolic SAR introduced, and then you would have taken your 10 candlesticks and you are out of the market. Now okay, let's see if the condition was also met. It was made, the spike made was over, but then the crossing did not take place here. The crossing did not take place here. So but with a little addition of your knowledge of price action and trade, you could still take a trade like this. Okay, but then stick to the original condition. Now let's look at this as well. The pips made over 40. Okay, that's the first condition. The second condition, look at the crossing here, and then parabolic SAR trade introduced. You would have taken your 10 candlesticks and you are out of the market, guys. So that's it. I don't want this video to be too long, so let's quickly go to crash and let me give you the condition there. Now for crash, you are looking at a crossing, okay, the same spike, okay, the same spike, but the crossing is now between the red line of the envelope and then the last line of the Bollinger Band. Now let me repeat, the crossing for crash is between the red line of the envelope and then the last line of the Bollinger Band. That is the down line of the Bollinger Band. Okay, the down line of the Bollinger Band. Now let's look for where the conditions were met on crash. Okay, for instance, let's calculate the pips made by this. Look at it. Okay, it wasn't up to 20 pips. Okay, but let's look at this. Yeah, this was 25, and then you would have taken your 10 candlesticks and you are out of the market. Now let's look at this as well. How many pips made by this candle? This was 11. It wasn't up to. Please, you really have to be patient with it, because if the conditions ordinarily, okay, ordinarily, if the market is, for instance, if crash is on a very serious downtrend, the parabolic SAR will not be introduced. Now look at this. Look at this place. Look at this place. It crashed here. the parabolic SAR was not introduced until it crashed again, and then it was introduced here. Now let's check the pip value made by this and see if our conditions were met. It wasn't met. It was 15 pips, so you wouldn't have taken this trade. Okay, you wouldn't have taken this trade. You would not have taken this trade. Okay, now let's check this. What happened here? Okay, condition met. Look at the crossing here, and then introduced here. Okay, then 1 2 3 4 5 6 7 8 9 10. Okay, you would have taken this is 11. This is 11. Now you would have taken your 10 candlesticks, stick to the conditions, and then you exit the market before this spike, even though the market still went up again. So it's all over the places. And remember that my conditions for handling spikes still holds. In case the conditions for you to trade with these strategies are perfectly met, but you are caught by a spike, please, you do not have to panic. Just stick to the conditions, the instructions I've given already on how to handle spikes. And don't forget that I said you only need to add little knowledge of your trend. Okay, now this is not a zero loss strategy, but if you stick to the conditions, adding your little knowledge of trend and price action, then you are good to go. Now you discover that crash has been on a very serious downtrend. Now if you discover that the market is seriously against the trend, please, you can stay away from the market. Okay, remember, I want to maximize our profits. So that's it, guys. I'm hurrying up because I don't want the video to be too long. I don't want it to be too long. Okay, but that's how you trade with this strategy. Now all these places, the conditions were not met because the pips value made are not up to. Okay, they're not up to, even though crash is on a very serious downtrend. Okay, very serious downtrend. Now let's check here. Not also met. Okay, not also met because the crossing did not take place right inside the cloud level. Now for crash, you're considering the cloud level below. Okay, you're considering this cloud level. All right, now even if you had taken this trade, even though the conditions wasn't perfectly met, but if you have taken the trade and you were caught by this spike, it would have still retraced. That's why I said you still stick to the instructions I gave on how to handle spikes. You can check it out in the description box of this video to watch the video, or to get that instruction. Okay, and what about this? It wasn't met, but like I said, with your little addition of price action and the knowledge of trend, you would have still taken this trade. So guys, many thanks for watching this video. Please feel free to test this strategy out first and foremost on your demo and see how it works. And if you feel like asking any question, you need guidance, please don't hesitate to leave your decent comment in the comment section below. Also feel free to contact me for any question, any guidance. Okay, but mind you, there'll be a kind of limitation to the answers that I give. If it relates to my mentorship program, then you could really have to enroll into the program. But then feel free to always contact me and ask questions and leave your decent comment in the comment section. Also, if you are new on this channel, I'd like you to hit that subscribe button down below, turn on the notification bell so that whenever I upload a new video, you'll be the first to watch it. And if you're an old subscriber, please, I'd like you to give this video a thumbs up, like, share it with your friends, and share every other video you found useful on this channel with your friends so that will reach larger number of audience. Okay, so many thanks for watching this video, guys, and I'll talk to you in my next video. This is CN Great Councils signing out for today. Bye.